2, 1, start.
So perfect. Welcome everybody. Today we had the idea of putting decentralized finance in the middle of this entire discussion, and therefore we are also very grateful to Custodigit for.
Oh, perfect. Welcome everybody today.
Topic, and I think it's very interesting to also have AAVE here, or AAVE, which is the right name, Marc Zeller, and besides Nicky from Custodigit, we also have Graham here, also working at Custodigit. With this, I would directly like to hand over to you guys, and maybe ladies first. Nicky, please present yourself briefly, and please also present your company, because it will be important to understand the context where you're coming from. Is this fine?
Absolutely fine, Philip. Thank you very much for the question. So my name is Nicky, Nicky Chalabi. I have joined Custodigit in 2020, in March 2020 to be precise. So who is Custodigit? For those that you don't know, we are actually a Zurich-based company backed by key players such as Swiss SIX Digital Exchange and Swisscom, and of course Signum. And what we're doing, we're providing the entire value for digital assets, the entire value chain, and basically through our platform you can store, transact, which means trade, and send and receive, and also issue digital assets. And I am basically taking care of sales and marketing at Custodigit. Thank you.
Excellent. Thanks very much. What's your background, business, IT, law?
Sure. So previously, before joining Custodigit, I worked for a crypto exchange based in Zug, which is Licky. I'm sure a lot of people who come from this space know about Licky. And before that, I was working for Avalok as a business and technical consultant. So my whole life, I spent pretty much with IT, and I truly love it.
Excellent. That sounds very good. Let's directly stay with Custodigit, and maybe Graham, please also present yourself, and also maybe some relations towards DeFi.
Yeah, hey, so I'm Graham. I'm a product manager at Custodigit. I help with the product in terms of the innovation topics in the custody space, so staking and decentralized finance. I previously, before Custodigit, used to work at a bank called Investec Bank, where there I was building out digital asset custody for the bank. So they were looking at custodying Bitcoin and Ethereum at the time. My relation with DeFi, I guess I've been around in the Ethereum space since late 2016 to the 2017, and seeing the first versions of some of the applications that came up in 2017. And being able to see the space evolve to where we are now in the last year, the incredible growth has taken place. And yeah, I guess I do some yield farming. I've been an active user of Uniswap. I don't really use centralized exchanges anymore. Very actively involved in the space.
So you're talking now on behalf of Custodigit, but also as a private individual.
Correct.
Doing 24/7 crypto and Ethereum, right?
Yeah, correct.
And we will also talk about other chains later on. Okay, Marc from AAVE, please tell us more about you and your company. Check your protocol.
Hello, everyone. I'm Marc Zeller. I'm the integration lead at AAVE. AAVE is a liquidity protocol, so you can basically provide liquidity or take liquidity from AAVE. And the interesting thing about the AAVE protocol is that it's part of what we call decentralized finance. So it's completely decentralized in the sense that there's no middleman, there's no paperwork, there's no things that are the usual bottleneck that you have in traditional finance. You can deposit anytime you want, you can withdraw anytime you want. It's non-custodian, you are always in control of your assets. When you pay for taking liquidity, you will always get the best possible rate given by the market every 13 seconds because it's done algorithmically directly on chain, on the Ethereum blockchain or the Polygon scalability solution chain. And my job at AAVE is to make third-party developer life easier, because with something that is decentralized and open source, anybody can build features around it and services around it. And actually, most users of the AAVE protocol don't use the AAVE website. Like Aave.com is not the main source of user and volume and activity of the Aave protocol, because they use those third-party building open source software and services on top of the Aave protocol, such as Curve.finance, Yearn, any other that famous name that you have in the ecosystem. Most of them integrate with Aave, and my job is to make their life easier in that process.
Excellent. So let's directly talk the first question about you at Aave. How is Aave exactly working? I, for example, could send my Ethereum to an Aave smart contract, and for this I would get a loan, for example, denoted in USDT. Is this basic, the very basic principle? And if so, how are you currently extending this? You know, there are stories about using real estate as a backing mechanism, right? There are other tokens. Maybe you shed a little bit of light because it's good to have the understanding of Aave directly being done at the beginning.
Yeah, so the basic idea is that, as we said, it's a liquidity protocol. So you can provide liquidity. And if someone takes the liquidity through the protocol, they got to pay for it. And when they pay for it, they pay directly you as a liquidity provider. So you will get interest directly from the liquidity you provide. That interest is paid every second by the smart contract, and you can withdraw anytime. So there's actual true compounding of your liquidity. So it's an actual passive income. That's the first thing. In the case of you want to take liquidity, you have to provide liquidity to act as a security deposit. And that will give you a collateralization, and every loan is over collateralized. For example, if you provide ETH, like $100 worth of ETH, you can borrow up to $80 worth of something else. And the Aave protocol is the largest liquidity protocol that is inside the DeFi ecosystem, with 25 different assets that are available, 6 different stablecoins. The stablecoins are the very interesting crypto assets that are pegged to the USD most of the time. So they are non-speculative, and they are what the market prefers to take as a liquidity, because it's non-speculative. So if you have like short-term liquidity needs, you want to borrow this kind of assets and basically spend them and then pay them back, because you know there's no volatility issue with it. The speculative assets that are inside the Aave protocol that can be used as collateral and are mainly used as collateral are the asset with some volatility, such as Bitcoin in the form of WBTC, Ethereum, Link, Aave, MakerDAO, all these kind of assets. And that's basically how all the protocol works. And there's no human intervention at all. Like the Aave protocol is what we call a DAO, a decentralized autonomous organization. So there's a native asset with the Aave protocol called the Aave token. And basically every Aave token holder have the governance right about the protocol. So they can decide if they want to onboard a new asset, remove an asset from the protocol. It never happened in the past, but it can happen. Change the risk parameters, so the LTVs for each and every asset. And it's completely done in a transparent and auditable way through the governance vote, what we call the AIP, Aave Improvement Proposal process. And it's a new way to basically handle this liquidity protocol, because before then there were like one team with a few guys that you don't even know their name most of the time, and they will decide if they want to add an asset, pick the LTV, all these kind of things. With the DeFi protocol, the actual DeFi protocol, as a user, you can decide the shape and form of your protocol you use. And I think that that's a huge difference.
Okay, that was a very good introduction. And now maybe back to you, Nicky, let's do another introduction question. How would you define decentralized finance, and what is exactly the key distinction towards financial services as we know them today and also in the past?
I mean, generally speaking, Philip, decentralized finance is one of the topics that I'm passionate about, and also participants or the speakers today, they're really passionate about it as well. As we've seen in summer of 2020, it was one of the hottest trends to emerge out of the crypto markets, right? And what does DeFi refer to? So it basically refers to financial services that are built on the blockchain. Mainly, as we see today, it's Ethereum network, which basically allows anyone to access financial products and services online in a decentralized and borderless manner. And we've seen already examples of decentralized applications already during the first crypto boom, which took place in 2017. So we had a lot of decentralized exchanges. So what were those platforms, right? So DEX platforms were developed to basically create a place where people can trade digital assets without needing an intermediary. And decentralized finance, or DeFi, it stands out as an alternative to traditional finance because it can remove inefficiencies we have currently with the legacy systems. And we can see that it's proving to be a reliable tool for enhancing the development of financial products that in the past they were domain of large and licensed and regulated financial institutions. So we see, for example, examples of financial derivatives as well as futures and swaps, which are powered by digital ledger technology. And this is becoming a reality given the amount of innovation around digital ledger technologies. And if, for example, we check DeFi Pulse, today we have around 60 billion total value locked in DeFi. And we have many examples of decentralized finance applications and protocols. So for example, as AAVE, which is a liquidity market protocol where you can participate as a lender and a borrower. Then you have some other prominent examples like Maker, right, which is a decentralized lending app. Then you have the Uniswap where you can swap tokens between Ethereum and ERC20 or earn fees by simply providing liquidity. And one of the interesting cases or interesting applications is the Synthetics, which is basically the Ethereum-based decentralized investment platform, which gives you the opportunity to produce and trade synths, which provide the exposure to tokenized versions of physical assets. And as Marc briefly touched on governance tokens, I would like to also mention that some DeFi protocols, they do allocate governance tokens, for example, to reward users for engaging with the system and for conducting or supporting different types of transactions. And also these governance tokens, they basically give the users some sort of right to returns from the project. And for example, you can vote on changes proposed to the protocols. Because of these associated rights, they have a value and they are tradable. So in a nutshell, the core benefit of DeFi, if you look at it, it provides an easy access to financial services, especially for those who are isolated from the current financial system. And another potential advantage of DeFi, if you look at it, it's the modular framework that it's built upon, right? Interoperable DeFi applications on public blockchain, they will potentially create entire new financial markets, products, and services. I hope I managed to bring some clarity here.
Philipp, you're mute.
Philipp, you're on mute there, yeah.
Oh, that is nice. How could this happen? You know, after 1.5 years of Corona, 1.3 years, I should have been able to unmute myself. Sorry. So I liked the answer very much. We already have some questions coming up from the audience. I will post them to you in a second. But before I do this, maybe let's directly jump to the next question, which I would propose maybe Graham could respond to. Who is making up the DeFi market? What are the large protocols, the large projects out there? What are the key chains on which all these protocols are running? And maybe you can add some details on who are the players at this point of time.
Yeah, no, I can answer that. So I think if we have a look at who makes up the DeFi market right now, I mean, I think Nicky and Marc both mentioned, let's say, the players in the market from an application point of view, AAVE, Maker, Uniswap, and a couple other ones that I'll mention. But I think the users of these systems are actually, let's say, in the last 12 months would have started off as people who held funds or assets on Ethereum and had sold into stable coins and were looking to generate some form of yield on these stable coins. And so there was pretty good yield for the everyday use on Ethereum to go and take their USDC or USDT, and they would earn, I mean, at times 20% interest, right? And there was an attractive, I think that sort of gathered the early on users in DeFi, and that's really what made up the starting space in DeFi. And that's now just really grown over the last 6 months to more users, more people using it for, I mean, the term flash loans. So that's really who's making up the market. And I think really chains like Binance Chain, even though there might be some criticism towards them, introduced really cheap and easy to do DeFi, right? And that's really quickly grown some form of the DeFi space because it was fun and easy to use and there was some yield to do it, even though there's a trade-off in other areas. And I think what we're seeing, I can see already, I mean, I have friends who went into the DeFi space 6 months ago, but now all of a sudden are wanting to get the yield. And I think the DeFi market now is quickly growing with the everyday user, the everyday person looking to achieve a yield. You know, I mean, in Switzerland, your interest rate in your bank account is less than 0.5%. Over a certain amount, it's negative. And these markets are enabling you to get a 5% yield on USD. And I think that's a real attractive for the everyday, let's say, holder of capital, that the capital can actually be earning an interest somewhere else. And I think to the other half of the question, what are the main protocols out there? I think both Marc and Nicky spoke about them, but if we really look at the big ones, it's AAVE and Maker at the top, and then you've got the other ones, Compound, which is very similar to AAVE and its structure. And then you start looking at the decentralized exchanges who also hold liquidity. That's Uniswap, SushiSwap. And those are really, I think, and Yearn, right, which is like a yield aggregator across them all. But I mean, off the top of my head, those are what I would refer to as the blue chip DeFi markets. They've most probably been around the longest, trusted ones. Those are the ones that have really seen incredible growth over the last couple of months. I mean, as Nicky said, I think I remember doing a presentation in September 2020, and the total amount in DeFi was just $6 billion or $7 billion. We're talking about protocols just like AAVE, we're hitting $20 billion. And the total amount sitting at $60 billion, and the growth has just been incredible.
Yeah, that was a very good overview. What about upcoming solutions? You now explained, because this was my questions, what are the key blocks out there, you know, the main building blocks, but do you see any upcoming projects where you say, wow, that's amazing, I should have a look at these products or at another protocol? Doesn't matter whether it's a protocol project or an entire chain which is upcoming. Any points where we should?
Yeah, I mean, I think right now, I like using examples. So Polygon, which was previously known as Matic, came in and let's say they're a layer 2 solution to Ethereum. And it was just, when I started using it about 3-4 weeks ago, it was just so much fun, right? It was really cheap, accessible, easy to use DeFi again. What I really remember 18 months ago in the Ethereum space, when you only used to pay $2 or $3 for a transaction, to where 3 months ago, if you were making a transaction on Uniswap, it was going to put you back $200, right? And it really put a lot of users off. And then moving across to Polygon, and you know, you're getting the same AAVE protocol curve. Uniswap's not across there. Uniswap will, implement their own one, but you've got SushiSwap there, and it's just really cheap DeFi, and it's great to use. And I think layer 2 is going to be really, really exciting to watch, see how it grows. I mean, Polygon just in the last, month has just absolutely exploded. I think Marc can correct me if I'm wrong, but AAVE has $7 billion of liquidity already on Polygon. I mean, this is a network is really just taken off. And then, you know, there are some other L2 solutions out there, like optimistic rollups, right, that Uniswap should be coming out within the next couple of weeks, and Loopring, and then there's these other chains, right? The Near protocol, Solana, Cosmos are also doing their own form of institutional regulated DeFi. I think the project's called T-Grade. So I think there are a lot of interesting projects coming up. I think DeFi is the hot topic, right? Where there's going to be a lot of competitors and people trying to create solutions in the space.
Yeah, very interesting. Thanks for this overview. And with this, I would like to present the first question coming from the audience. What are, with respect to AAVE now, what with respect to AAVE are people actually doing with the protocol, and what are the exact use cases? So in case I am sending my Ethereum to AAVE and I do get some USDT back from the protocol, why am I doing this? You know, is it just for financial constructions of all kinds of experiments, or what are people doing with this? Are they basically taking the USDT and doing something with it? Do they purchase something with it? Do you have any idea of how people are, you know, end to end use the AAVE protocol?
It's an incredibly simple question that is incredibly difficult to answer to.
I know.
Because at the end of the day, what do people do with their money? Whatever they want is their money. That's the answer. At the end of the day, the whole idea is that if you have some ETH, some Bitcoin, or some digital asset that you believe will do well in the future, and obviously nobody can predict that. Maybe you're right, maybe you're wrong, but that's a dilemma that is as old as financial market at the end of the day. But if you take that bet, maybe, and you have short-term liquidity needs for any kind of reason, because you are entitled to do whatever you want with your money, yet again, maybe the best idea, if you are consistent with your ethos on this thing, is to say, okay, I will not set my ETH for some dollars right now to buy me a car or whatever. I will just borrow some USD-based or fiduciary currency-based stablecoins and use that instead to buy myself a car. If you are a speculator and you really believe that the Ethereum price will be higher at the end of the year compared to now, you can use that stablecoin, so USD-based digital asset, and say, I'm going to buy more ETH with it. And I will deposit that back into AAVE to increase my collateral and just pray that I'm right, because if I'm not right, like every speculator out there, like half of the speculator are always happy and the other half are always unhappy, but that's how it works, you know. And yeah, so basically the answer, you can do absolutely whatever you want, but the good thing is that nobody will ask you whatever you want to do with your fund, because there's no middleman, there's no paperwork. You are in control of your asset. That's the whole ethos of decentralized finance. You own your asset. If you want to use it as collateral to have some short-term liquidity, just interact with the protocol out there. And it's completely decentralized and permissionless.
Excellent. I think this is a good answer, but so to some degree, you can answer this question. To some degree, you're unable to answer it because it's, of course, done in a way that you don't know what's happening afterwards, right? What happened now in the recent crash? There should have been some liquidations, right?
Yeah, there's been, because obviously, you know, with like volatility works both ways. So when price go up, people are generally happy, and when price go down, people are generally unhappy, unless people are betting otherwise, because that's how market works. And basically, what happened during last week events, when we are recording this, we are like at the end of May. If you are listening to this or watching this in many months or in the future, we got a huge volatility event at the end of May in the crypto ecosystem, 30 to 60% drop in most assets out there. And what happened during that black swan, because we can talk about a black swan, like 60% volatility event is a black swan by any metrics. It's not the first time that it happened. We got another black swan like a bit more than a year ago in March 2020. We used to call that the Black Thursday, with a 30 to 50% volatility event in a couple of hours. We got what the ecosystem called the bear market. in 2018, with the top of January 2018, Ether price at $1,400, and the bottom of December 2018, Ether price of $80, so 94% drops. So that's also a volatility event. And basically, in all those events, what happened with DeFi is that every 13 seconds, we'll still have a block on the Ethereum blockchain. When a position is not collateralized enough, when you reach the maximum LTV, what we call the liquidation threshold, basically anybody in the world can pay back your debt on your behalf. And who's going to pay back your debt on your behalf? That's a crazy thing, like paying back debt on your behalf. If that's an option, I will sign for it. Obviously, it's not a benevolent action. As every single position is over-collateralized, there's basically a buffer between the maximum threshold up for liquidation and the deposit value. And that threshold can be mobilized and used to pay what we call the liquidation bonus. So anybody in the world is incentivized to pay back debt on behalf on the borrowers up for liquidation because they didn't collateralize enough their loans or the volatility got them. And that happened in the financial market. And they will do that in order to protect the protocol, make sure that there's $1 behind every asset that is inside the protocol liquidity. And it just works. It works in the worst volatility event. It works every single day. And yeah, I have the feeling this kind of events like are a huge testimonial of the resilience of decentralized finance ecosystem, because a few protocols went down in smaller markets such as the BSC. Not many, like one or two, but it was like more reckless markets. When you look at the actual DeFi, what Graham called the blue chip, no issue whatsoever. You look at MakerDAO, no bad debt, Compound, same thing, Aave, same thing, obviously, Polygon, same thing. And it tells something about the maturity of the ecosystem. Obviously, decentralized finance is very new. Obviously, there's still many things to learn, but we can take a 60% volatility punch in the guts and just operate as normal every day.
Excellent. Very nice. So far, I think we know the history about Ethereum and Bitcoin. This all has been about retail so far. Yes, to some degree, we also had family offices joining and a couple of funds. We have MicroStrategy and so on. This is all known. But my personal feeling is that decentralized finance is still largely happening at a peer-to-peer level, to some degree retail, to some degree also some kind of funds which are doing their custody themselves, not assigning the custody to other administrators. And Nicky, I would like to ask you if my perception is right or if I might be wrong. And this would also lead to the next question: how can institutions plug into decentralized finance? Does this somehow work? Does it not work? And how can you do this?
So, Philipp, as you mentioned, like in 2020 and 2021, we have seen some institutional adoption around digital assets, primarily Bitcoin. So we've seen Tesla investing, then MicroStrategy increasing their stake in Bitcoin. And generally speaking, a good starting point for financial or institutional investors is to differentiate between crypto, which is Bitcoin in particular, and decentralized finance products. So to date, most institutional interest has involved simply holding Bitcoin or Bitcoin futures. Only few players were trying to understand and peruse exotic DeFi products, right? And this you can understand as well, because from one perspective, financial institutions, they are, especially the regulated financial institutions such as banks and exchanges, they are managing billions of dollars worth of other people's money. And therefore, they are required to, by law, to fulfill an overabundance of rules regarding the type of assets they're holding, where they're holding them, and how they're holding them. So in addition, if we look at the returns on DeFi, right, it might seem like a no-brainer when rates in the DeFi protocols on US stablecoins, for example, yield between 2 to 12% per annum, or also some exotic protocols where you have something yielding sometimes up to 250% per annum. So there are many things that need to be developed to ensure institutional interest in DeFi protocols, and definitely there are benefits for the institutional investors or regulated financial service providers. If we look at the current financial sector, and if we just do a little research around it, we see that financial service providers or these financial sectors, they already invest around like $1.7 billion in blockchain services around the globe per year. But due to regulations and low levels of liquidity, this has led to a limited impact, of course. One of the biggest advantages for financial service providers of adopting DeFi is that it removes many of the barriers to access financial applications for individuals and institutions that couldn't access them before. So its decentralized nature removes the need for a trusted mediator and streamlines banking processes. Also, the biggest opportunity for traditional financial institutions is not going to come from these established large businesses, in my view, but rather emerging economies and SMEs. So by adopting DeFi, banking services will be removing effectively many of the barriers facing this, in turn creating new opportunities for growth. And there are many ways, actually, the banks and corporations can benefit from offering DeFi services. So, for example, if you want to serve your customers across the globe, you can do it without opening any international branch, let's say. You can send money instantly and almost without any fees or corresponding banks. Then you can earn, let's say, a fee on every peer-to-peer loan or trade or make an asset conversion. You can also issue digital coins to facilitate customer transactions, let's say. And if you want to gain competitive edge, this of course will allow you to do so because you will be ahead of the less digitized rivals in the competitive banking space.
Okay.
So
I also like to add there, right, maybe just a touch on the point and how institutions get there, right? And I think, I saw some questions from a regulatory point of view. And if we had a look 2 years ago when the digital asset space started to pick up with Bitcoin, and then FATCA came out and introduced the travel rule, right, for all these custodians of the assets that now need to send this message around in terms of proving who the beneficial owner of these funds are. And you could see how quickly the industry adapted and implemented that rule. And it's pretty much enforced today. And I think we're already in 2018 of the digital asset boom, right, and DeFi right now. There's a lot of interest and attraction around it. And as institutions start to investigate it and look at it, I think you're going to start to see a similar place where there's going to be similar rules like the travel rule that get implemented from a regulatory point of view, just to protect the user, right? And I think once these are in place, there's greater incentive for the institutions to come in. But the institutions have got to come in the first place. And I know AAVE is working on some permissioned tools, right? Permission products that allow institutions to create a permission pool on their protocol, which they can still apply KYC rules to, and a whole bunch of these current institutional, it's a requirements from a regulatory body point of view that they have to do. Now, if you think of a new bank starting up, they are able to just maybe create this permission pool on AAVE, and they actually don't have to go and buy an expensive lending application, right? That most probably will cost them millions of dollars a year. They can actually now just plug into AAVE, and AAVE is their borrowing and lending application that they can serve all their customers for. And really, that's where the real pure innovation is going to come in. Is that DeFi has the potential of being just another banking application, part of a big bank ecosystem. And the real point is that at the end of the day, me as the customer of, be it Credit Suisse or UBS or Goldman Sachs, I shouldn't care how my loan's given to me or how my money gets moved. I should really have the best underlying application. And I think, I can still bank at Credit Suisse maybe one day, and AAVE is the actual loan provider underneath. And the amazing thing is that Credit Suisse aren't paying millions of dollars every year to a banking application kind of form.
Well, this is all very good, and I think you explained perfectly what you could do with decentralized finance. But now, one additional question to this: what are institutional clients and asset managers already doing with DeFi? Are they already doing things with AAVE and other protocols out there, or is this just for future plans? Yeah, because it's not easy for institutions to go into this space. So, are they doing this already, DeFi?
So the first thing I want to say is that it's pretty obvious that you cannot grow from what was 18 months ago a $1 billion market to all things considered a $120 billion market just based on retails. I know retails are numbers, but it's hard to find $120 billion. That's a lot of money. So obviously they are already here. Not all of them. Maybe just the more reckless of them or adventurous. But there's already a decent amount of institution inside the ecosystem. But what we have to say is that if the ethos of decentralized finance about being permissionless, decentralized, all these kind of things is really important, and that's nothing. That's not something you want to negotiate with. I do understand that for a lot of people coming from traditional finance, it's out of comfort zone. And what we have to understand about decentralized finance is that it's not about a competition or a zero-sum game with traditional finance, or even this thing in between that we call usually in the ecosystem centralized finance, like with the Custodian, the exchange, like Coinbase, this kind of guys. It's a spectrum because there's different actors up there. And different actors have different needs. And when we say DeFi is for everyone, we want to address all the section of that spectrum. For example, when we launch the AAVE protocol products on the Polygon network, we are addressing the side of the spectrum that is less than 5-figure portfolio that don't want to pay a lot of transaction fee. And we are working for them on that particular market. But on the other side of the spectrum, the side that maybe doesn't care as much to pay $20 transaction fee because their usual portfolio is more 8 or 9 figures, or even more than that. What they need is not low transaction fee, but more comfort zone in terms of compliance. What they need is KYB, know your business, KYC, know your customer, KYT, know your transaction, all these kind of things. And it cannot happen in a fully permissionless environment. So in the current set of product of decentralized finance, it cannot happen because you cannot have both KYC and permissionless. It just doesn't work. But what you can have, it's still a decentralized protocol that you can fully trust, that is auditable, that is open source, but in a permission need environment with a whitelist. And basically, when you are an institution, you really don't want to put like $100 million in this kind of device that you give to an intern, because many bad things can happen. Maybe you are more comfortable to talk to Custodigit and a trusted third party to say, okay, we want to get $100 million into USDC, a stable coins, and we want to get that into AAVE Pro, trusted environment. Can you please take our money and deposit on our behalf? Because we trust you guys. You are regulated. We know that nothing bad will happen to us. And that's the future. And that's just a different kind of actors with a different kind of need. So they will have services tailored for this kind of need. And that's the whole point of decentralized finance. It's freedom. It's having services that suit everyone.
Yes, and I would like to add to it, like, obviously we are like at the beginning of the development of DeFi, but it's also impressive to see what has been achieved in such a short time. Like if we look at Ethereum, it was only developed in 2013 and went live in 2015. And we have to take into the consideration the long-term vision of DeFi. And the long-term vision of DeFi in my view is to connect the bricks in order to kind of create a fully functioning and fully automated trustless financial system. Of course, some people might take it by mistake that in the minds of DeFi enthusiasts, the relationship between decentralized finance and banks, it's all about disrupting, which is basically replacing and even destroying legacy systems. However, there are many ways that actually decentralized finance can cooperate or collaborate with the traditional finance. And there is a fine line of equilibrium that needs to be reached pretty much between the tech-based, fast-paced crypto and regulated financial systems. And building a bridge between the two will only benefit the system as a whole.
Yeah, this is an interesting question, and it also adds to what previously has been said. But I would like to follow up on this question because, you know, regulation is really tough. And the question is, do you take current regulation and current companies and simply twist it such that you are connecting existing DeFi protocols, or do you have to twist DeFi protocols such they then fit to regulation, right? This would be one question, and this is related to the second question. Does this really make sense? Or what I currently believe is, because of regulation, DeFi simply moving more and more in the peer-to-peer space because it's simply too difficult to connect DeFi to legacy business. You know, as Philipp, I can have a bank account with my bank, and the bank would offer me in the background some kind of DeFi service. You know, this theoretically on PowerPoint would work. But alternatively, I could also cancel my bank account. I would have a self-custody app, you know, something like Argent or something like else, and DeFi is connected to this. Then the banking service is basically provided by some kind of website, by some kind of whatever trustworthy app. And I'm moving my money out of the regulated ecosystem towards the peer-to-peer ecosystem because my personal opinion is that in the last years, the technology always developed in this direction where there is no regulation. People do not want to mess with regulation. Don't get me wrong, it's a different story. People do not want to mess with regulation, but they are simply trying to find ways to build products without touching regulation. That's exactly why we have so few security tokens and endless ICO tokens, right? That's exactly why now we are talking about NFTs stuff of digital art instead of putting legacy art somehow tokenized on blockchain. You know, this is something different. So DeFi is basically the idea of decentralizing things such that regulatory efforts are not touching these protocols because there is no issuer anymore. And the more I think about it, I could also imagine that given this regulatory scrutiny around the world, and you know this is increasing, that DeFi, you know, it's like a liquid, that DeFi is basically like a liquid flowing and moving into those areas, which would be peer-to-peer, where there is less or no regulation because regulation is just not applying to peer-to-peer finance. Well, I'm oversimplifying this. I know this at this point of time, but I hope I made these points clear what I'm thinking. And I would like to ask you guys, what do you think about these observations? Is it true, or did I confuse things?
I mean, I can take this question. Generally speaking, yes, you're absolutely right. There is regulatory arbitrage going on in this space, because if we look at the decentralized projects, they operate without a license in most jurisdictions, regardless of where the end user is based. So, and also if we look with regards to taxation, the handling of DeFi assets is also not clearly outlined in most jurisdictions. But again, it's such a new industry, novel industry, that regulation still tries to catch up. Today, if we look at the DeFi activity, it's just a small percentage of the total crypto market activity, which itself is actually tiny in comparison with global financial markets. In the same way, I would say that regulators around the world are currently addressing regulatory questions regarding crypto assets, for example, such as establishing new license regimes for crypto custody, like which happened recently in Germany. DeFi assets and products, in my view, will certainly fall under stronger regulatory scrutiny, given that the user base and locked in assets will further grow, because we see like a huge growth in there. And of course, this will be addressed by the regulatory authorities. And this will, of course, kind of enable compliance with regulatory goals to be automatically monitored by financial authorities by reading the market's ledger and as an active DeFi infrastructure participant. But also what we see is that regulator is kind of a step behind, right, when it comes to new technologies or new applications such as DeFi. And we see that there is still like a missing link where regulator also needs to build some sort of technological know-how when it comes to such topics. So at the moment, yes, we see that the space is unregulated, but in my personal view, I don't think that this will remain as such for a long time, especially when the user base is constantly growing.
But I mean, on that point though, right? Like, I mean, Marc mentioned it, really the regulatory thing, when we look at regulation, you look, how do you protect the customer, right? That's really purely where you're looking at these users, how do you protect the everyday user? And I think, you know, Marc mentioned some of them, you know, it's KYC, KYT, so know your transaction, know your customer, some travel rule perspective on the exchange of funds. And I think people have solved the travel rule, right? There are companies that have come up that have solved the travel rule. And I think when regulatory scrutiny comes up, there are going to be companies that will be created out of it in terms of how do you provide some form of compliance or regulatory tool to the providers of AAVE or big banks that can help and answer these regulatory questions. Because they'll come, right? They'll come. But in reality, I trust AAVE more than what I would trust my bank. Because I can read the code of AAVE, right? And I can read the code, I can see the community comments on it. Whereas in reality, my bank today, I can't go and have a look at what lending protocol they have. I can't actually go and see their actual books. I can't see how much assets are being backed, right? Is the money in my bank account actually banked by cash? Where in AAVE I can. And I think once regulators start to move on to the DeFi space, they're really going to be able to see and learn themselves and understand that the place isn't that bad. And that there are going to be the simple questions that need to be answered, KYC, KYT, and those are really easily achievable, and there'll be solutions for those in the future when there needs to be the need for it.
Yeah, I agree. Marc, would you like to add something?
Yeah. Well, what is important to realize is that a fully decentralized protocol doesn't have any kind of possibility to intervene with the protocol. Like, as an AAVE Genesis team member, I cannot act on any position on any users. That's not a possibility on the technical way. There's no way a central entity can act on a protocol. Only the community can act. And what is important is to understand the potential synergy instead of threat of regulation, because like nobody loves regulation. Nobody wakes up in the morning and say, "Hey, I'm gonna read the law today." I know there's a lot of lawyers. Maybe they're listening to us, but I don't think a lot of them, even if that's their job and or they make money, wake up each morning and say, "Hey, I'm gonna read the law today." But what is important is to understand that having regulation give you a framework, give you the idea that what you can do and how you can do it. And that's really important, because when you have that, you don't have clear bottlenecks left to grow. Because when you know that, okay, these is the rules, if you apply them, it's okay with us. Then you can work on the possibility to enact that and basically comply with that and then grow from here. So it's more a recognition of the decentralized finance ecosystem where when a clear regulation will happen, then a threat, in my eyes, as a DeFi actors. That's the first thing. The second thing is that the DeFi protocols out there, Compound, MakerDAO, AAVE, or the other ones, what we are, basically, it's a bunch of code on a public blockchain. We are the infrastructure. We are not really the services, the end services, because as I said before, most users of AAVE don't use the AAVE website. They use some kind of third-party services to access the liquidity of the AAVE protocol. Either they are on the borrow side, and for example, if they are traders, they can use the widely known for this kind of actors, DeFi servers, that will help them take leverage position on the market, or if they are on the passive income side of the protocol, they will use Y-earn, which is the yield aggregator Graham talked about. So basically what we are, it's that we are infrastructure. So a completely decentralized protocol, I'm not quite sure can have some kind of banking license or this kind of things. I don't see how it can happen, like even technically how it can happen. But I think $1 billion business will be created or are already created to be a centralized entity, like an actual entity with like someone that wear a tie and a suit and say, okay, I have like this kind of a license, and my job will be to the new Revolut and basically send me, I will open you an actual bank account because I am an actual bank or neobank, and basically my saving accounts will use the Compound protocol, the MakerDAO protocol, the AAVE protocol, or whatever is interesting. And I will do that on behalf of my user because I am a regulated entity. And I think those kind of actor, which is not AAVE per se or MakerDAO or this kind of guy, they are building $1 billion companies.
Yeah, excellent. Yeah, maybe let's come back to the to what interfacing services in terms of the user experience could be done. How can institutionals get an interface to decentralized finance? Maybe that's a question for Nicky and Graham, and also concerning the risks which is involving this. What risks are out there for institutional players who do not want to tackle these risks themselves, but rather basically outsource these risks to financial service providers? And what steps can people or you undertake to manage and mitigate these risks? Maybe Nicky, you go first.
I mean, Nicky, you want me to
Sure.
answer? I can answer it if you want.
Yeah, Phil, go ahead. I can add them. No problem.
Yeah. So, I mean, firstly, I mean, how do, let's say you want to connect to these protocols, right? So, I mean, you just connect directly to the smart contracts. I mean, maybe Marc can touch on more on the integration side, right? But these smart contracts almost runs like an API on the Ethereum blockchain that you can just call the contract method and interact with the contract on that level. That's
literally this.
Yeah.
If you understand how API works, you understand how Web3, so the equivalent on the Ethereum blockchain works. So it's not on the technical side, it's not outside of any kind of comfort zone.
Yeah, and I think, you know, that's where players like Custodigit or Custodians, right, are able to provide the next piece of the puzzle. And it can be very complicated. If you're a first-time user to DeFi, there are these transactions that you have to make and MetaMark pop-ups and approvals you've got to sign. And then, you know, there's like transactions you mine, and it's very daunting, right? And it's the Custodian's role here, like Custodigit for the institutional players, is to provide an easy interface for the customers to easily to understand. And I think that's where the institutions have a chance here, is taking away the complexities and the, let's say, DeFi language that you might find that can be confusing to the end user, bridge it into an understanding or language that the user is comfortable with today in their institution, let's say in their banking product, right? And give it to them in an easily understandable format with only one transaction that they see, not multiple transactions, maybe to approve and submit it. So it's very easy to use and very it's very aligned to what they currently do in their banking, right? I think that's where the one opportunity lies as the custodians in the market. Then if we had to talk about the risks, I mean, there are multiple risks associated in DeFi. I mean, sometimes the yield is, I mean, you know, when you get guaranteed a 50% yield, right, you also always got to question, why is it 50% or why is it 1,000%? And obviously there's a risk associated with that yield. And firstly, I mean, you're looking at just like the network effects, right? So you're saying, is the smart contract secure? Is it safe? I mean, I think it's, let's say the ICO boom was all these hacks, right? Or fake runs. I mean, today in the last 6 months, there are a lot of these fake DeFi companies who go and want to get a whole bunch of liquidity on their platform. And then they, what we refer to in the DeFi space, pull a rug and take all the funds out of the contract and then the users out of it. But there are really smart protocols coming up. I mean, one is Nexus Mutual, right? Where I can take, if I go and deposit, let's say 10 ETH onto AAVE, I can now go and buy insurance, decentralized insurance from a company called Nexus Mutual. which will cover me for my 10 ETH in the case that AAVE gets hacked, or if there's a smart protocol issue, a smart contract issue with AAVE, Nexus Mutual can pay me out. And so now we see the building blocks of traditional finance coming to DeFi, right? Where we have this AAVE protocol providing me, I'm providing liquidity there. And then we've got this insurance block coming in and offering me cover if something happened to my funds on AAVE. And I think that's where we're starting to see, how do you mitigate this risk? And I think there are these very clever, let's say, building blocks that will come together and help us mitigate the risks.
Yeah, go for it, Nicky.
Yeah. From my perspective, when it comes to actually technical risks, there are potential remedies already for code bugs and technical failures. Like, for example, that could be third-party audits, insurance schemes, of course, regulation in the form of necessary risk management procedures, also capital buffers or consumer protections. Also, one thing that we should not forget, and we've seen the example of it, which is the transparent and formalized process of good governance within the DeFi protocols, which basically can quickly freeze the smart contracts, update the code, or even undo certain transactions in extreme cases. For example, we've witnessed this with the DAO fork refund. The other risk that I also see from my perspective, like DeFi applications, some of them were kickstarted by a certain team or a company, and far from being truly decentralized, although once they are established, they generally aim towards decentralized governance and decision making. And as long as the application is semi-centralized, where the funds are transiting through an intermediary or with an intermediary being able to freeze funds, counterparty risks always exist. And we've seen the cases such as, for example, with SushiSwap, then we've seen the rug pull of DeFi 100, and then we've also seen the case of a scam or of a loss of funds of $11 million with I think it was BeyondFi. So this is also, the governance also is playing a huge role here. A scenario in which, for myself personally, in which DeFi projects are governed in a truly decentralized manner is still currently like something that needs to be worked on. And on top of it, as mentioned before, right, how our compliance and regulatory requirements are addressed by a decentralized form of governance? What if the majority token holders, for example, in a decentralized decision-making model, simply don't vote for compliance updates or financial anti-money laundering requirements? So it's like here basically where the regulator and the DeFi sector will have to come together with viable and sustainable solutions in that regard.
Excellent. I think this is a very, very, very good point. Yeah, we are soon at the end, unfortunately. Would you like to add some more specifics, maybe recommendations? What should the audience do? Should they move away from DeFi? Should they join DeFi? Should they read things, educate themselves? Should they invest? What would you recommend to them?
My main advice on this topic is to actually try the thing. Like, it's always good to have some theory, but at the end of the day, we have new scalability solution like the Polygon market with a lot of application and direct on-ramp. So you don't have to open an account in a centralized exchange. You can use like Transact, Ramp Network, or whatever suits you there. And basically throw $20 at it and try it, because the transaction fee will be very small. So you can deposit some fund into AAVE. You can do a swap on Curve, maybe try a fancy yield farm protocol to see what happened, maybe good things or maybe bad things. But I have the true belief that you need to try this thing to understand truly how game changer and paradigm shifter it is. So have a go at it, like risk $20 on it. What's the worst that can happen?
I love this. Exactly, especially if you're not investing thousands of euros at the beginning, but as you said, 20 euro, 50 euros, it will gonna inflate anyway. So why not try it out and just do it? Any recommendations from you, Nicky, Graham?
Yes, sure. From my side here, I would like to actually bring out the statement which was mentioned in Consensus Q4 2020 report, DeFi report, I believe. Like it was mentioned that if a Bitcoin proved to be a global digital store of value is possible, then Ethereum proved that the entire decentralized financial ecosystem is inevitable. And here I totally agree with Marc. You should try it. You should embrace it. Because in fact, from my perspective, it's like, it's not that we use technology, we live in the world where we live technology. So it's something that you should try and you should understand. Yes, I understand there are still usability issues, that the applications are not so user-friendly if you're an average user, let's say, right? But it's a space that's worth exploring and worth looking into it. And I firmly believe that in the long term, a maturing DeFi ecosystem will, together with political stakeholders, regulatory supervisors, and also the traditional financial sector, forge the necessary conditions and frameworks that allow it to realize its full potential.
Actually, I think this was the perfect closing word, if I can say this. Very, very nicely spoken, with a hands-on approach with Marc, also nice advice. Let's leave it with this. I think it was a very, very good, very deep discussion. We could have gone on for hours. I think there would be so much more to discuss.
Yes.
Let's do continue it at some point of time. I enjoyed it myself. I also learned a lot. And therefore, thanks much for being here. And in case the audience would like to reach out to you guys, yeah, I think you're happy to get an email,
yes,
respond to questions, or get funds via the AAVE smart contracts, right?
Absolutely.
Thanks.
Absolutely.
Talk to you soon.
Thank you very much. Thank you.
Bye.
Bye-bye. Have a nice day.
Goodbye.